Let's get across what will be moving markets in the early hours of trade in the Asian region. Peter Mcguire from XM joins me now. Peter, nice to see you, and I like your Christmas tree. So let's get to Wall Street on Friday. Bit of a snapback, but does that mean that we're on, back on track for that Santa Claus rally?
Well, good morning, Nadine. Merry Christmas to everyone at Ausbiz, and thanks for a great year. Where does it move? Well, look, any time that you see extraordinary moves in what you just mentioned as far as November, some of those stocks were up just, mind-blowing numbers. You've got to go back and really digest history to see any sort of comparison to other monthly gains, and you may have to go back 100 years. It blew off a little bit of hot steam. I think the rally is probably back on track. There's a time and this is what trading's all about. You see those blow-offs. It loses a couple of percent here and there, and then all of a sudden, everyone stacks back in. So I've got to say it was a nice, a very refreshing Friday, and I wouldn't be surprised if that continues up until the end of the year, Nadine.
Okay, so taking a look at the FOMC, clearly it was the dot plots, the changes to that did spook markets. But then we had an inflation read on Friday that seemed to calm the horses because, of course, it's implied within some of the commentary coming from the U.S. Fed is that they do expect to see inflationary pressures magnified under the new Trump presidency come January 20th.
Yeah, that could well be the case. I mean, President Trump, we're going to be in for an exciting year, Nadine. You can't discount that. If you're looking at the pathway forward out to 2027, the Fed is expecting core PCE to hit 2% by 2027. The new dot plot, as you mentioned, we're looking at 2 cuts in 25. Remembering that, roll your mind back a couple of months in September, and there were officials were saying you're going to see 4 rate cuts in 2025. So they're trimming that. And 1-year expectations for inflation, if you look at University of Michigan and also the New York Fed, they're projecting rates of 3% and 2.9% respectively. So, yeah, it's going to be a very fascinating first quarter to see how all of this, wrestles with the analysts and certainly with traders and, of course, central bankers globally.
So as far as data goes this week, it will be very quiet with Christmas upon us. We do get, a little bit of data coming out in Japan. What can we expect considering we've heard from the BOJ already?
Yeah, well, as you know, I mean, if you're looking at the Bank of Japan, it's saying that hovering next rate hike probably in March. Core rate edged up to around about 2.2% year on year. As far as inflation, that's around about that 2%. So, look, it's going to be a tricky one again for the Bank of Japan. You've seen a big washout as far as yen. You're running at around about 156.5, Nadine. It's just been an almighty trade going back for the last 18 months, yen versus dollar. Currently, as I mentioned, 156.5. They could see, edge up even higher before Christmas. I wouldn't be surprised to take a 157 handle out. And do you see some form of intervention from the Bank of Japan? Also, Nadine, you've got to be conscious. The story, I think, for the year, as you mentioned, the big tech stocks, but certainly you can't shine the light off King Dollar. It's been extraordinary, that US dollar index, and I'm not expecting it to take a backward step. Have a look at the Aussie. It's been crushed.
Yeah, all right. Particularly versus the greenback. But, there's no currencies that are performing versus the greenback right now.
No. Canada at 4.5-year lows for the loonie. So, if you're buying, if you're a Canadian traveling, certainly to the US, you're going to be hit hard. And as we just mentioned, as far as Aussie, 62.5, it'll be a very expensive trip to take on Disneyland at this time of year. And then naturally, what you're looking at as far as pound and the euro, is there any chance, Nadine, to see parity against the dollar 1-for-1? Many analysts are saying it, and you may well see it over the January period.
Well, Peter, I've got a pretty toxic combination happening here. I'm a Canadian, Australian who is traveling to Canada and the US over Christmas. I'm in a bunch of trouble. I already know this. Okay, so what could upset the apple cart? We're obviously keeping a very close eye on bond yields.
Yes.
Yeah, how are we expecting that to play out over the Christmas break? I guess there's no way to really know.
Government shutdown could be a big, card that gets played. We've just got to see how that also rolls. And as you mentioned, as far as bond yields, I mean, the graph tells the story, Nadine. That's the one for traders to really look at, because, when you're trading, you've got to be across a composite, from your yields to naturally to dollar and then to stocks and to commodities and, and the currency play. So really take that on board and, study that intently. Now's the time to do the study. You've probably had a good year of trading, hopefully, if you've looked at, your technicals and your fundamental indicators. And now's the time to really consolidate and spend, a couple of weeks reading, studying, and set yourself up for 25, because I think it's going to be showtime.
Wow.
And it's going, 24 was electric. I think 25 is going to play it.